Vanguard's FTSE All World has an ongoing charge figure of 0.19%, but this is not the true cost of this index fund. It's actually 26% higher. But this doesn't only apply to VWRP. Through researching this, I also discovered the true fees of ACWI, the current top pick for a global ETF in many people's eyes in the UK. But this doesn't only apply to VWRP. Through researching this, I discovered it applies to all index funds. The S&P 500, the FTSE 100, the NASDAQ. Each one has an ongoing fee. It's what we're accustomed to. It's the number usually used to compare different funds, as it is the headline number. But only referencing the ongoing charge isn't just misleading, it's straight up wrong. And I've actually been guilty of doing this myself. So in this video, we'll be discussing the true cost that you pay when investing into an index fund, which is very important to know if you are trying to save and invest for the long term, as the lower your costs, the more you'll end up with. And if you do need a hand with investing, check the first link in the description, chuck your email in, and I'll send you an investing guide and help you out every single day for the next 30 days. And then you'll probably want to work with me after that. I'm going to be leveraging Vanguard's public information for this. Stick with me, as if you're investing your hard-earned money, you need to know it. Firstly, we have the TER, total expense ratio, or sometimes called the OCF, ongoing charge figure. This is the headline fee that you will see when investing into a fund, and this is essentially the ongoing cost for the fund provider of operating the fund. Using Vanguard's VWRP as our example for now, although don't worry, I will go through State Street and iShares example shortly, the ongoing charge figure is 0.19%. Importantly, we don't see this fee come out of our cash, our own money. We still pay it though. It's essentially taken by the fund manager from the fund's assets. Next, we have the transaction costs. This is rarely talked about as it isn't included in the headline ongoing fee number, but it still forms part of a fund's true costs. It includes the charges incurred in buying and selling investments in the fund, normally relating to dealing costs and taxes. An important point here, transaction costs, just like the ongoing fee, isn't based on how often you trade. One thing I continue to love about Vanguard is that they are very transparent with the fees on their funds. You can see in their full costs and charges document exactly how much you will pay in all of these fees I'm going to talk you through in this video. For VWRP, the transaction costs are 0.03%. Although this is of course a very small percentage fee, this is another cost of investing into a fund. These transaction costs are again taken by the fund manager, although once again, we don't pay it with our own cash. So for VWRP, we're now up to 0.22% in total fees. Desmond, as some might call it. Before moving on to the next fee, you can see here that transaction costs for some funds are relatively high. Look at the FTSE 250 here as an example. The ongoing costs are small at 0.11%. However, the transaction costs are 0.26%, making the true cost of this fund much higher than you might think. That's why this is an important video and an important topic. Bizarrely, transaction fees can also be negative, as you can see for some of the funds here. For example, the ESG North America All Cap Fund has a negative transaction fee of 0.25%. This is a bit weird, I'm not going to lie, but it's essentially due to a quirk in how these asset managers track these costs. And long story short, this is negative because the price fell between the fund manager clicking buy or sell and then the buy or sell order actually being executed. It's really just down to luck when this is negative, and this cost saving isn't really passed on to you or us as investors. We won't get any cash, but it does reduce the fund's overall total cost in the period. Next up, the bid-ask spread, or as Dave calls it, the big-ask spread. That honestly never gets old. But this is the difference between the buy and sell price. Vanguard calls these one-off costs, and it's an estimate using a 30-day rolling average. Once again, you won't pay this with your own cash. It is another indirect fee when investing into an index fund. But this fee is a little bit different, as the fund provider doesn't take this like the previous two. It's set by the market makers on the stock exchange and ultimately reflects the supply and demand for that specific fund. For VWRP, this one-off cost is currently 0.02%. Once again though, some of these funds have high one-off costs. Look at these ESG funds, for example. A few of them have one-off costs of 0.2% and above. making these funds relatively much more expensive than you might have first thought. Back to our example though, this means the total cost of Vanguard's VWRP FTSE All World Fund, the most popular global ETF for UK investors, is 0.24%, a bit higher than the 0.19% headline number. Although that is only a 0.05% difference, in percentage terms, 26% more expensive when you factor in all the fees, which isn't meaningless. And this is the case for pretty much every fund. There will be transaction fees and one-off fees, such as spread fees, that aren't included in the headline ongoing charge figure. An important point to make here, mutual funds, for example the FTSE Global All Cap, do not charge bid-ask spreads. So mutual funds one-off costs are always 0%. These spread fees are just applicable to ETFs. For popular funds like VWRP, in the example we've gone through, the funds are large and very liquid, so the spread fees are tiny. But for funds that are smaller in size or more niche, the spread costs may be larger, as we showed with those ESG funds from before. And you'll pay more in indirect spread fees if you are buying and selling more often. This is another one of those indirect transaction type costs that we don't pay directly with our cash, but we still incur when investing. I'm conscious we've covered a lot and there's some nuance between these different fees, so I pulled together this table on screen to summarize what we've been through so far. This now is more of a true reflection of the cost of an index fund, and feel free to take a screenshot of this for later. Of course, this and the various fees vary by the specific fund and by the asset manager who is providing the fund. I will come back to that asset manager's point in a second, but first to quickly finalize this comparison that we've gone through, the total cost of VWRP, which is a global index ETF, we said is currently 0.24%, higher than the 0.19% headline ongoing fee. And the total cost of the FTSE Global All Cap, which is a global index mutual fund, is 0.29%. This is also higher than its headline fee. In this case, is 0.23%. And coincidentally, it's also 26% higher when you factor in all of these other costs. Now, as is a mutual fund, there is no one-off costs, but there are higher transaction costs for the FTSE Global All Cap at 0.06%, and this is because this global fund invests into several thousand more stocks than VWRP, so naturally it incurs more in transaction costs. I've been banging on about Vanguard so far, who are the second largest asset manager, but what about the other two asset managers on the podium, SPDR or State Street, and iShares, who are owned by BlackRock? I'll be honest, I was struggling to find this information from them directly. It's not as readily available as Vanguard's, but let me run you through exactly what I did find and hopefully it makes sense. We're about to get a little bit nerdy with it, starting with State Street's ACWI ETF, which is an ongoing charge figure, that headline fee of 0.12%. This is currently the lowest fee accumulation global ETF for UK investors. The ongoing charge figure is readily available like always, but now it's time to try and find the transaction costs and the one-off costs associated with this specific ETF. For State Street, I found this 2024 Master Excel document, which I know is a couple of years old, but it does show ACWI has a 0% transaction cost, which I didn't think is right. I looked through the documents on the ACWI fund page too and couldn't really find anything. Unless I'm doing my Stevie Wonder impersonation, I couldn't really find much. But then I came across this, a 1,000 plus page annual report and exhilarating read. I managed to find this section on transaction costs, and when I took the transaction costs, which I've highlighted here on screen, and divided these by the total net asset value, I have discovered something, and this is insane. 0.16%. The transaction cost is more than the cost of the fund, and it's more expensive than VWRP. Then I realized something. I have fat fingers, and I missed a number on the end when I was doing the calculation. Sorry for the panic. Comment below if I got you. But adding another 8 to the end here of the calculation, which I probably shouldn't do in Google anyway, the actual transaction cost is 0.02%, which of course is tiny. Now this was at the 31st of March 2025, so it was over a year ago, but I did try and confirm this was still the case. I found this, which is on HL, for the transaction fee for this ACWI ETF. This is a bit confusing as HL include their HL charges, which are the platform fees. We can ignore these as we're just looking at the index fund fees, but it seems the transaction costs here amount to 51p in year one in HL's example, which works out to be 0.1% in transaction costs on a 5k investment. That's the transaction costs. HL also shows the indicative spread for ETFs, those one-off costs, and State Street's ACWI is 0.03%. This means the total rough cost of ACWI, which is the lowest fee accumulation global ETF for UK investors right now, using HL as a proxy for the transaction cost and adding in the ongoing charge figure and the spread, is 0.17% in total. One grudge I do have with this though is how hard it is to work out. I do wish that other asset managers made it as simple and as easy to find as Vanguard do, as ultimately these are the actual fees that we pay. But anyway, quick rant over. Now for the largest asset manager, BlackRock, and through iShares, they also offer a global ETF. This ETF tracks the same underlying index as the previous ACWI ETF, the MSCI All Country World Index. iShares ticker symbol for their ETF is SSAC, and the headline ongoing charge figure is 0.2%, which is of course more expensive than the two previous examples. Let's go through the exact same process though, and I went down another rabbit hole going through another 1,000 page plus annual report. I know what you're thinking, but I promise I'm fun at parties. I save my discussions of ETF costs purely for between the hours of 9 and 5 on most days. Once again though, I took the unaudited transaction costs with 2002, which is in thousands here, from this annual report by iShares, and then divided this number by the net asset value number of the fund, 25 billion, as of the 30th of November 2025. This gave me a transaction cost of 0.01%. When I asked AI as well, just to sense check this, it gave me a relatively similar answer of 0.02% for this ETF. So I think my back of the envelope calc using the annual report was roughly along the right line, but it might be a little bit outdated. So using this 0.02% transaction fee figure and adding in the very tiny spread fees of 0.01% using HL again as a proxy, plus the ongoing charge, the headline figure of 0.2%, means that the total cost of this SSAC global ETF is 0.23%. I'm conscious there's been a lot of numbers thrown at you, so here is a summary of these three ETFs that we've gone through and their total fees. You can see that the total costs of each of these index ETFs are actually quite a bit higher than the headline ongoing charge figure. I guess the difficulty is that the transaction costs and the one-off costs do change over time, but they are still important as they're an indirect cost that we pay as an investor when we put money into an index fund. One more fee worth mentioning is incidental costs. Now, none of the ETFs we've gone through as examples in this video charge these incidental costs, but it's worth being aware of just in case. If you were using an ETF that was charging incidental costs, then you'd also add this in to get the total cost of the fund. So what can you do with all of this information? Do you want to spend a Thursday evening reading a 1,000 page plus iShares report? Probably not. In your defense, I'll speak on your behalf on that one. But the important point is, and as you can see, there are a lot more fees than people often like to talk about online when it comes to investing in index funds or ETF, and I'll hold my hands up too and admit that I've been guilty of this one. The reality is you can't really avoid these fees that are the costs of investing in funds, but it's good to be aware of as this is your true cost. And ultimately so, you can factor this into your forecast and compounding projections, as these fees are coming out of your and our pockets. But really, as you've seen, when it comes to the large popular global ETFs, those extra fees, although we still incur them, are tiny. Before you click off, let me quick fire go through a few more fees that you need to be aware of that you might incur when investing in index funds. Depending on what broker you're using, there might be trading fees. If you're using a legacy or full feature broker, you will likely pay some trading fees when buying or selling. For example, these are HL's dealing fees. Now, these fees are taken directly out of your own cash, although on some brokers you can get around these by setting up a regular monthly investment, which you can see is the case with HL. And of course, if you are using a zero commission broker to invest, then you won't pay these trading fees at all. FX fees, you will pay this as another type of trading fee, essentially, if you were investing in a foreign denominated fund, a fund listed in USD, for example. Simply invest in GBP listed funds to avoid these FX fees. Rebalancing, if you have multiple funds, you may need to periodically rebalance your portfolio. If this is the case, you may pay additional fees in terms of one-off spread fees, trading fees, and FX fees. A similar thing goes for distribution funds when you're reinvesting those dividends that you get paid out. But back to rebalancing, and this doesn't just apply to you rebalancing your portfolio, it also applies to the fund manager rebalancing the actual fund, which can happen after a company buys back their shares, issues new shares, or after an IPO. This is called slippage, which is an indirect problem of investing in index funds, and there's actually a few others too. I'm conscious though, we've already gone through a lot of information in this one video, and the fees that we have covered are the main ones to be aware of. But, and I don't want to open up a can of worms, there are some more underlying indirect fees. I'll put a few of them up on screen if you wanted to go away and research them yourself. Now, there is a lot of nuance here, and these are even more nerdy, but if you'd like me to cover them in a separate video, please let me know in the comments below. As a very quick one-liner, the tracking difference is arguably the most important thing to look at, as it shows how efficiently the fund manager is tracking the underlying index. Even given everything that we've gone through, and maybe it does sound a little bit scary, but index funds are still the best way to invest in my personal opinion, and I have the large majority of my money in global index funds and ETFs. But I do think that all of this is good to know and important to know, because ultimately it's what you're paying for when investing. I'll leave it there, and of course in this video I've talked a lot about global index funds and ETFs. That's the main way I built up my own investment portfolio, where I now have well over £100,000 in various different global funds. But global funds do have a few problems that you might not be aware of. So watch this video on screen next, and you can click here if you want to know what they are and how you can get around them.